Hello and welcome to the Business Standard Morning Show. I'm Veenu Sandhu. Let us take a look at the stories for the day. The 70-year-old relationship between Tata and the Shapoorji Pallonji Group has gone from sweet to sour in the last few years. The Shapoorji Pallonji Group has expressed its intent to exit Tata and liquidate its 18.4% stake. Its efforts to do so did not succeed last year. Will they work out this time round? Watch this report.
Reeling from a debt of more than Rs 20,000 crore, the 156-year-old Shapoorji Pallonji Group is said to be nearing a deal with a foreign investment firm to pledge a part of its stake in Tata Sons and raise about 8,000 crore. The group holds an 18.4% stake in Tata Sons, the holding company of India's largest conglomerate. Media reports suggest that the funding deal might close in the next few weeks. Though the SP Group is of the view that it does not need the Tata's permission to pledge its stake, the deal could face hurdles if the Tata Group objects. It has to be noted that the Tatas had foiled the SP Group's attempt last year to raise funds from Canada's Brookfield Asset Management. The SP Group has a total debt of Rs 20,000 crore, of which Rs 12,000 crore is under a moratorium till 2023. SP Group's promoters, the Mistrys family, had offered to exit Tata Sons last year after their 70-year association soured following the removal of Cyrus Mistry as Tata Sons chairman. How much is SP Group's 18.4% stake in Tata Sons worth? The Tatas say Rs 80,000 crore, the Mistrys say Rs 1.78 trillion rupees. The Tata Group offered to buy out the SP Group's stake, but the two sides differed on its valuation. While the Mistrys wanted Rs 1.78 trillion for their stake, the Tatas claimed a valuation of Rs 80,000 crore. Meanwhile, the SP Group is trying to sell some of its non-core assets to pare its debt as part of a restructuring deal it has struck with lenders. Its core construction business has been hit badly due to the economic slowdown in the past few years and the COVID-19 pandemic. It has also agreed to sell a majority stake in Eureka Forbes at an enterprise value of Rs 4,400 crore to global private equity company Advent International. Eureka Forbes is known for the AquaGuard brand, a household name in water purification, besides Forbes vacuum cleaners. The group is further trying to sell Sterling and Wilson Solar, one of the country's largest solar companies, and the construction and engineering company Afcons Infrastructure. In April last year, the group sold 5 solar assets to KKR & Co. for Rs 1,550 crore. Now, will the Shapoorji Pallonji Group be able to monetize its stake in Tata Sons this time? Let's wait and watch.
Some recent developments can potentially alter the strategic picture of the Indo-US region. Now, Prime Minister Narendra Modi is in the US, where he will participate in the first in-person Quad Summit. Watch this report for the significance of the summit and what India should expect.
Prime Minister Narendra Modi will attend the first ever in-person Quad Summit hosted by US President Joe Biden today. The other participants are Australian Prime Minister Scott Morrison and Japanese Prime Minister Yoshihide Suga. The summit will be held at the White House in Washington. We have with us defense expert Ajay Shukla, who will explain the significance of the summit and outline India's expectations going in. He will also brief us on the impact of the new Trilateral Security Alliance, AUKUS. What is the significance of the first in-person Quad Summit?
So the quadrilateral dialogue, or the Quad Summit as it's called, it ostensibly brings together 4 democracies, the United States, India, Japan, and Australia, to resolve issues in the Indo-Pacific. And these are largely issues connected with Chinese aggression, like the intrusions upon freedom of navigation and other elements in the global commons, as they're called, which the Quad tries to say it belongs to all nations and should not be monopolized by one, as China tries to do. Now, China views this as an anti-China grouping. And since the exercise Malabar of 2007, that's an exercise in which the navies of the 4 Quad countries come together and exercise together. China objected to it and has asked questions about its purpose and why these democracies are coming together. It feels targeted. Now, the Quad has been growing steadily. The four countries have met first at official level, then at foreign minister level. In March, President Joe Biden hosted the first ever summit of the Quad leaders in virtual format. And now on the 24th, they will meet in person. So it is striving for an Indo-Pacific region that is free, open, inclusive, anchored by democratic values, and the message is sought to be sent to China. This time, the Ministry of External Affairs in its briefings has said that the leaders will also exchange views on global issues such as critical and emerging technologies, connectivity, infrastructure, cybersecurity, maritime security, humanitarian assistance, disaster relief, climate change, and education.
What are India's expectations from this particular summit, and what does it hope to achieve?
It should be said at the output that there are no deliverables. When diplomatic meetings are held, sometimes there are deliverables, like you are expecting an announcement to be made about some kind of mutual item. But this time there are no deliverables. Holding the summit is an objective in itself. It brings continuity to the Quad's objectives. It brings it high-level attention. And of course, what is never said is that it maintains the pressure on China. The summit also provides a political framework for the four-nation exercise Malabar, the naval exercise that we talked about, which brings the four navies together and which has been growing in complexity and sophistication. So they rehearse exercises, anti-submarine, anti-surface warfare, anti-air operations. All these are rehearsed by the four navies together so that if China ever needs to be militarily confronted, there's a well-rehearsed plan for doing so.
What function does the AUKUS serve? Is it going to be more effective? Is there something new here?
To begin with, we've got to be absolutely clear, AUKUS does not have any participation from India. It's a new purpose-built alliance between three countries, very close partners, traditional partners. That's the US, the United Kingdom, and Australia, that perhaps coincidentally happen to largely represent the white Anglo-Saxon world. Like the Quad, the AUKUS alliance has a geographical center of gravity in the Western Pacific, which is, as we all know, the place where the rising power of China is increasingly manifesting itself. Now, AUKUS is being formed barely 1 month after the completion of US troop withdrawals from Afghanistan. So it's safe to assume that these three Western powers, US, UK, and Australia, all of which were together embroiled in that war in Afghanistan, now feel unconstrained and able to devote mind space and the military muscle to the new challenge posed by China. So they are building up capabilities and military might in the Indo-Pacific theater. Now, the seriousness with which all of this is being taken is evident from the promise of nuclear submarine technology, something that the United States has never shared with anyone except for the UK in 1958. It is now promised to do so for Australia. So Australia can expect to have a fleet of nuclear-powered submarines that will again put added pressure on China, will increase the military might of the AUKUS grouping. Besides sharing submarine technology, the three countries have also said there are plans to share intelligence, quantum technology, cruise missile technology, to name a few. Now, let's remember there are already alliances that do all of that. For example, there's the Five Eyes Alliance, intelligence sharing arrangement that incorporates the US, UK, Australia, all three of the AUKUS countries, as well as New Zealand and Canada. But, it's not such a close partnership. There is a fear that in case one has to take a hard decision, like going to war, New Zealand and Canada might not sort of agree to that. So it could well be that AUKUS eventually becomes the main alliance. It eventually pushes the Quad to the strategic sidelines. All three AUKUS members are long-standing allies, remember, that have stood together, fought together in multiple conflicts, recently Afghanistan and Iraq. And that readiness to spill blood on one another's behalf is a crucial factor. Could India be a part of the grouping? It is unlikely. We'll see in the months ahead. There's an 18-month consultation period for AUKUS, where they'll decide procedures, joint activities, and so on. But eventually, India itself is not given to joining alliances. Mostly, it wants to retain freedom of action for itself. So for now, I think we are going to watch India watching AUKUS from the sidelines.
Hopefully, India-China relations will move on a positive trajectory going forward, and both sides will be able to manage their differences without further conflict.
It has been a topsy-turvy week for the global equity market given the Evergrande crisis in China. Now, will this event trigger a correction in markets, or is the worst over? Let's listen in to what Kotak Mahindra AMC Managing Director Nilesh Shah has to say on the matter in this exclusive interview.
Welcome to the show, Nilesh. Let me start by asking you regarding the recent development in China with respect to Evergrande. Are the concerns laid to rest, or can the ghost come to haunt the global financial markets again?
So Evergrande is more of a China problem than a global problem. It's a serious problem for China, kind of their Lehman Brothers moment. However, with $3 trillion plus reserves, they are quite capable of managing it. There will be no contagion effect of Evergrande in global markets, except for temporary, setbacks or correction here and there. However, there will be consequences of Evergrande. China is large consumer of commodities. Real estate in China is substantial part of that consumption. With Evergrande, real estate will slow down, metal prices will correct, and metal stocks will see correction and consolidation at lower levels.
So is this temporarily over, or do you think that will it come back to haunt us again?
See, you can never expect sentiment of the market. If we were, let's say, at 15,000 Nifty, this news would not have been a big impact. At 17,500 Nifty, obviously there could be some impact. At 20,000 Nifty, it will have a bigger impact. So many a times market wants to correct but needs a catalyst. And events like Evergrande can act as a catalyst.
Okay. So do you think that where are we heading in terms of the market levels then? Are we looking at 15,000 from here, or are we looking at 20,000 from here, let's say over the next 6 months?
It's always difficult to predict market. In March 20, if you had asked me where will markets be, by wildest imagination, I would not have said 17,000 Nifty by September 21. So this is a market which is now fairly valued. From a fundamental point of view, corporate results are coming very good. Sentiments are positive thanks to opening up of economy as COVID cases are falling, vaccination is rising, and there is money flow coming from retail, HNI, mutual funds, insurance companies, pension funds, and foreign portfolio investor. And events like Evergrande are actually going to convince global capital allocators that they need to invest in India as a corollary, as an alternative to China. So when markets are supported by sentiments, flows, and fundamentals, every correction is an opportunity to buy.
So in terms of risks to the market, Nilesh, how would you rank the following? Surplus liquidity that has made the markets run up so much since March 2020. Sticky inflation in terms of India, or the retail investor frenzy that we've seen over the past few months?
So to me, none of these are risks. The inflation is coming. Brigade has already seen the inflation coming below RBI's target level. With correction in global commodity prices, that pressure is off. Number two, retail and HNI today are matured. For 18 months, they have made a lot of money. leverage is non-existent in market, and we are not seeing all-in mentality, which we normally see during bubble or top of the market. People are still having skepticism about market. People want to invest when there is a correction. No one has thrown caution to the wind and getting fully invested by fully leveraging. So retail HNI also not a worry. In terms of liquidity also, it's not a worry. Our worry should be our fundamentals. God has given us an opportunity to narrow down gap with China. In 1980, we were equal to China. Today, they are 5 times bigger. They became manufacturer to the world.
Correct.
Now, in that 40-year period, we have become back office to the world. We have become pharmacy to the world. Now, we should grab this opportunity with both the hands and become manufacturer to the world. China plus one and production-linked incentive scheme, if they deliver, we will be on the path to become manufacturer to the world. Corporate profitability will be rising, and liquidity all over the world will search for that growth in India.
Whether it's the Evergrande crisis or the US Federal Reserve's taper timeline, we often hear about markets being kept on edge and volatility in the market. Now, what does this mean? And what is the barometer to measure it? Here's an explainer.
The India Volatility Index, in short, is termed as India VIX. It indicates the degree of volatility or fluctuations traders expect over the next 30 days in the Nifty 50 index. India VIX was introduced by the NSE in 2008, but the concept was originally introduced by Chicago Board Options Exchange in 1993. The value of India VIX is derived by using the Black-Scholes model, using 5 variables, that is, the strike price, market price of a stock, time to expiry, the risk-free rate, and volatility to arrive at an absolute value. Further, this value is arrived at by using the best bid and ask quotes of out-of-the-money, present and near-term Nifty option contracts. Now, a higher value of India VIX indicates higher volatility expectations in the Nifty, and a lower value of India VIX indicates lower volatility expectations. Let's understand this using an example. Say the India VIX is at around 15 and the Nifty 50 is at 17,000. This means that traders expect 15% volatility on either side over the next 30 days. In other words, traders expect the Nifty to trade in a broad range of 19,550 and 14,450 over the next 1 month. Past trends suggest that there is a negative correlation between Nifty and India VIX. That is, every time India VIX falls, the Nifty rises. And when India VIX rises, Nifty tends to fall. So, is there any ideal range for India VIX? Well, theoretically, VIX ranges between 15 and 35. That is, anything around or below 15 would suggest low volatility, but if it is above 35, we can say volatility is high. Back in 2009, India VIX spiked to over 50 levels, following 2 upper circuits on the day the election results were announced. Now coming to the question, is India VIX a good indicator? Well, VIX helps understand if market participants are feeling fearful or complacent about market in the near term, and gives a fairer idea about choppiness in the market.
And that's all we have for you today. We will be back with more news and analysis in our next episode. Stay tuned and thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.